Hi, this is Bill Wood with Discipline Trading Decisions. Time for the weekend update for the S&P 500. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Welcome to the weekend update for Monday, September 19th, 2016. We are covering the S&P 500 futures market, so let's take a look at the monthly chart. Okay, we are trending higher. We just broke out of this previous high on week volume, and so now we're re-entering this area, this balance zone. The stochastic is at an extreme, but you can see that it can stay that way for a long time. We stopped one time framing higher, and we're riding this Andrews pitchfork line here. We may be targeting, if we break through, we may be targeting this high volume node at 2060, 2061. And I guess the next target would be this low and then this low. On the weekly, we are trending higher. We have found support along this channel line here, which the top of that channel is here and the bottom of that channel is here. We're very close to this median line here. We have more room to go to the downside on the Stoch, and this could easily turn around and head. We're beginning a series of one time framing down. This is only the second candle that's one time framing down, or this is the first candle that is beginning a one time framing down. We could say that we're in a 2-week balance, and the market seemed to have gotten support along the top of this edge of that balance. On the daily, we are still trending higher. The Stoch looks like it's beginning to turn around, but it has room on either side. Inventory may be getting short here. We had all this energy built up, and it broke down out of that energy, and you would have thought that it would have continued lower, but we ran into support along this median line here, right? It's hanging right on that median line, and if it can't break through it soon, then all these people who are trying to push this short, they're going to have to cover. So it'll be interesting to see what this does, if it can break lower or not. We are in a 6-day balance, and we have high volume node down here that may act as a magnet to draw the market down here. On the 4-hour chart, we are coiling up, and we are getting ready for a breakout. Don't know if that breakout is going to be to the upside or to the downside. To the downside, we have this this demand zone rather area, and it coincides with this high volume node here. Actually, we're in between two volume nodes here. This one up here and this one down here. We're smack dab in between. If we go down to the downside, that would be my first level of support. Well, first would be this trend line, this median line, then this one, and if we go to the upside, the upside, we're still looking at creating new highs. So I don't know if we can do that or not. This action here may just simply be stopping out all the week longs so that it can go higher. On the market profile, the value areas are pretty much balanced here. We do have acceptance at these lower prices. We have poor lows. We have a poor low from today. We have a poor low from this day. Not only that, not only is it poor low, but it's a weak low because it was almost equal to that the day before it. So this area should be revisited. Um, let's just, that's the wrong thing to say. This area, the odds of this being revisited are high. The odds are high. The odds of this being revisited, the odds are high to be repaired. But the market was weak. It could not fill in these few single prints. The market broke down out of that balance area up there. A lot of longs were liquidating. We wound up here on Friday. We opened down here on Monday. It actually reached down to 2100.25. I think it was just a tick away from 2100. So we opened up here and we repaired all these anomalies in here. So the next day we opened here and we're trying to force the market lower, right? Trying to force it beyond this point. Could not do it. Then we opened up right in the middle of this range. Tried to move higher, couldn't break the high. Tried to move lower. At the end of the day, couldn't break the low. So we have a lot of positions being made here and they're not getting paid. So once we break out of this area, there are going to be some shorts that we'll need to cover. So next day we opened here, drove higher all day, could not fill in these single prints. That's a weak market, right? So next day we opened down here and we just balanced. So we're very comfortable in this area here, and we're pressing these lows. And if we can't get this to go lower soon, then you're going to have some just very short-term shorts that we'll have to cover. So be careful in this area because it's easy to get chopped up. So being right in the middle of the range, your targets are the low and the high of that range. From there on the downside, you have 2100. And on the upside, I believe the market was aiming that 2200 is, of course, a psychological level that the market was aiming for also. Could not reach it. So the market was pressing higher, could not reach that 2200. Everybody's looking around at each other saying, I'm long, are you long? Yeah, I'm long too. There's nobody left to get long. So let's inflict some pain and get some people out of their positions. Now, when you take the longs out of the market, you actually make the market stronger. The only thing in this situation is that I believe that this is a lot of pain. And if you were long and you're suffering this much pain that quickly, do you really want to get long again? Now, it could be someone on a higher time frame just wants to wash out the longs, and so that he can get the market to go above the previous highs. We have the Fed announcement coming up, so we're coiling up. We're in breakout mode. I'm sure whatever the Fed says, whatever their announcement is, will drive the market either higher or lower. Don't know which way that is. Anybody that tells you they do, it's a really good guess. Couple arguments for the downside is that we had such a strong move down. We have an A, B, C correction, and we left a tail up here. I meant to circle it like that. We left a tail up there at this C correction. We also could continue to coil up as a flag. You could say that this is acceptance down here. This is excess right here. We have excess up here. We have excess up here. So I think the odds are that we'll go lower, and if we if we go against the odds, if we break to the upside, I think that you would have the larger move out of the two. So again, be careful. We're having an announcement this week. If we do break to the upside out of this consolidation, then I'm still expecting this 2200. Well, that's what I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do or what anyone else does. You have to believe in your analysis of the market in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.